What's up, guys? Sorry for the delay. I know I haven't posted in like 2-3 weeks. I just got back home from my vacation in Michigan. I flew up there to see some family. But anyways, this video, I had a lot I was going to do with it, but like I had some plans. I wanted to make it a certain type of way, but I changed my mind, and now I'm just gonna just talk about price like we always do. So over the past 2-3 weeks, there's been a lot of interesting things, a lot of good setups, a lot of potential pips to be made. Past 2-3 weeks for me personally have been really good. I think I lost maybe 1 or 2 trades, and it was only for about 10 to 15 pips each. And my winners have been gaining, all my trades are 3-1, 4-1. So my winners overcome that stuff, the small losses. But anyway, so we're just going to talk about price. This may look all hindsight, which technically it is right now, but I'll tell you guys the stuff that I actually did see and call out in advance. So I'm not afraid to say, oh, this one's hindsight, and this was a really good potential trade that I should have taken. I'm not scared to say, yeah, this is hindsight, or you know what I mean? So this is how you learn. You learn through hindsight. So, fuck the haters. There's a lot of fucking haters on Twitter, man. They can all fall off the face of the earth. I don't care. You got haters, you're doing something right. Anyways. So yeah, let's just jump into it and just talk about what's been happening over the past couple of weeks and how I've been interpreting price. So first things first, the dollar, because I trade euro and I trade the pound. And when you're trading those two pairs, you need to be familiarized with where the dollar is and what the dollar is doing. Because the dollar is the catalyst for those two pairs. Majority of the times. All right. So let's just rewind about 2 weeks ago. Like I said, this may look hindsight, but if anyone has any doubts that this one right here was hindsight, please let me know and I'll send you all the proof, which I don't even need to do that because, I'm not trying to prove anything to anyone. I'm making this video to help you guys and because I just enjoy doing this. And I enjoy documenting this stuff so I can go back in a couple of years and see where I was and see how I was doing. So that's the purpose. But anyways, this trade right here and this analysis I'm about to show you guys was documented and it was called out and we actually took some trades on it. So here's the dollar daily chart. I'm not going to dig into it too much, but anyways. So right here we have a daily order block. Correct. Right here we have a fair value gap resting just above the daily order block. And I'll highlight that for you guys. So the daily order block and this fair value gap blends together. When price came down right here, they stopped just above this candle's wick. And this is what I mean by they engineer these setups because they did this on purpose. They stopped just above this wick. They don't dip into the fair value gap right yet. Why? Because they want to trick people into this being support. And then you see price rallied higher and took out the high. Once we did that, and we broke lower right here, as soon as this red candle right here happened, that was my green light to look for dollar moving lower. Where's it going to move to? It's going to want to fill in this fair value gap blended with this daily bullish order block. So how can I get in sync with the market? This is how I did it. Once this bearish candle closed on this daily chart, and then we opened this one, I don't even know what days these are, but okay, my birthday was on the 16th of October, which was Friday. So this had to have been 14th. So this was Wednesday. And then here's Tuesday. So this was Tuesday. And then Wednesday. So Thursday opens up. Anyways, I was anticipating the dollar to open right here on the next day and come up, fill in this little imbalance, blend it in with this bearish daily order block, which is the last up close candle before this aggressive down solid bearish move. Look at that candle right here. See how full it is? There's no wick on it at all. That just tells me, you know, that it's a solid order block. So I'm going to use this last up close candle blended with this fair value gap right here. I'm going to take the order block's wick. Then I'm going to take Tuesday's candle's wick. And then the price that's in between that is where I'm looking for the next daily candle to open, come up into there, and then reject lower. It doesn't have to hit the order block. Not on this particular trade. I'm just expecting it to come and fill in this fair value gap and then move lower. And then my weekly objective, this was last week, by the way, this analysis was. My weekly objective was looking for foreign buys. I'm going to show you the signal I called on Euro USD for buys that I'm going to show you the buy signal I took on Euro, which was the same thing as this. I'll get there in a minute. This is just my DXY framework that led me to taking my Euro buy. So again, I'm waiting for the next daily candle to open. I want it to rally up, preferably during London or New York open. And it did just that. Then I want it to come down and take out this low, these lows right here, and then fill in this imbalance, which is blended with this order block. The last bearish candle, which is another solid bearish candle. I'm going to go ahead and delete this. And then we have all these back-to-back bullish candles. So yes, that's how I choose. That's why I chose this candle. So we're going to hit play, and obviously we're going to see it pan out. But let's just watch. Just like that. So I'm sure you guys have all heard me say this, and I think I've made a couple posts about it where I say, you know, I don't care where the market's going to be in a month. I'm just trying to capture the weekly range, the bulk part of the weekly range. And this was it right here. This high down to this low was the week of the 13th through the 15th or the 19th, whatever. But this was the weekly range right here. This high to this low. Should be Monday, the 13th. No, it was a Monday, Tuesday, Wednesday. Okay, perfect. This candle was Monday, Tuesday, Wednesday, Thursday, Friday. So this was a bearish week. This is the whole weekly range from high to low. And that's how I framed it. I missed out on Monday, but that's okay. I missed out on Tuesday. That's okay. Wednesday, missed out. Thursday, sell, DXY. That's how I framed it. From this imbalance down to this imbalance, which blended with this order block. So, yep, let me just check something out real quick. 93.48. Okay, that's not it. Never mind, not this example. Okay, so with that being said, I was able to call some really good Euro buys. We're gonna go ahead and do that. Then we consolidate it inside of here. And right now, this is what's going on. Today's Monday. Today is Monday, the October 25th. And so far, the market opened on Monday and we rallied. higher. We're rallying away from this order block. So I'm on the side still. I'm not 100% sure what I want to do for this week, but I like how we consolidated here and we rejected higher. You know, in a perfect world, this order block right here is going to take price higher, but there's a couple things I'm also looking at. I'm gonna get rid of all these lines from that framework. Before I even talk about this, let me get to that EURJPY example before I forget, before you guys forget everything I just said. Sorry about that. All right. So everything I just spoke about on the dollar, I flipped it for the euro. And it was actually a little cleaner on euro. Okay, the same thing. Here's our imbalance. I'm going to make these lines thinner. A little too thick. Okay, so highlight the fair value gap. I'm showing you guys the framework on euro and dollar. That gave me the euro buy. Let me check something out real quick. Back on the dollar, we did make that higher high. Okay, yep. This is not what I'm talking about. Okay. Here's something else. Every time we're looking at a reversal, 9 times out of 10, you're going to see some type of raid, a liquidity run. And you can see that right here. See how this is the dollar, this is the euro daily chart. We broke the low here. And you can see that here. Then we broke higher and broke market structure right here. This was a classic trade. It's as classic as they come. Why the fuck did it just do all that? I don't know. Okay, here we go. So I was wanting euro to open up and do the same thing I just highlighted on the dollar. Feeling this imbalance, dip into the last bearish candle before this aggressive up move, and we got a market structure break right here. We closed above these equal highs, and then I would look to be a buyer. Where would I aim for? I would aim for previous daily highs, which would be this one, which would be this one. Also, we have a little, imbalance in here. Well, can you highlight that, Grant? Sure. Here, this candle's low. This candle's high. So we could look to buy in here, take out previous daily highs, and fill in this inefficient price action. So this was the smart money reversal. We took out this low here. Boop. And if we go down to a lower time frame, I did not dig down to lower time frames on dollar. Dollar, I stayed on the daily chart, but euro, the pair that I'm actually trying to identify a setup in, I did dig down. So here's that raid again. See how we dipped down below this low and then we broke higher? All right, look. When we dig down to the 4-hour chart, that same daily imbalance, that inefficiency I showed you, on a 4-hour chart, you can see another one right here. I'm not going to put the lines there, but it's going to be this candle's low, this candle's high, candle in the middle. There's the fair value gap right there. So that was my euro target. And notice how that right here is above these equal highs. So they tend to engineer price like that a lot. If you have the eyes for it, you'll see that happen a lot, where they rally up and they fall just shy of an imbalance and then go lower. And then they engineer the setup and leave this fair value gap unfilled for future price action to fill. So I dug down to the 4-hour chart. We can see all this. What do you see right now? Perfect bullish order block right here. We had the bearish candle, huge up move, and then another imbalance on a lower time frame. which will be this candle right here, the order block's high. It's going to be then this candle right here, the low, the price action in between that. These are the sensitive order blocks. This is order block selection. This is how, these are the ones I love. You get the fair value gap, you blend it with the dollar. So we have a weekly direction, a daily bias. We're going to go above here. We're going to want to fill this. We can anticipate all this to happen. This was the trade I gave out in advance before price was even right here. I gave it out Sunday before the market opened. And here's, so we got the order block here. We got the raid. We got the break in market structure. We got this stuff over here, all these fair value gaps and imbalances. We have the bearish dollar I just showed you guys. And last but not least, we have a bullish breaker. This green candle right here, and then we broke lower and ran sell side liquidity here, and then broke up. You can, so this would be a breaker. I'm using this candle because the body of it, there's not much wick on them, and it's the last solid green candle. Then we have all these back-to-back red candles. This is pretty much a swing lower right here. So I chose this candle, not these candles. A lot of people, they choose these ones right here. It may look, after I click play and show you what actually happened, it may look like, you know, I should have chose these ones, you know, but I chose this one. Who knows if I'm right or wrong? I do this a lot, but this is the candle I chose. And then we blend the breaker with our fair value gap right here. We can blend that also with the order block. So this was the beautiful classic textbook EURUSD buy setup that I gave out last week. And it was beautiful, guys. It was beautiful. And there you have it. My buy limit I gave out was 1.1573, which would be right here. We had literally a 1 to 2 pip drawdown. And now you can see why I didn't choose these candles right here. I guarantee you 90% of Twitter, or people that claim they know ICT, students or whatever, which is okay. It's okay. Everyone's different, but I've seen this happen a lot. You know how people on Twitter, they annotate everything. They would have chose this candle right here, or both of these candles as the breaker here, because it's the last two bullish candles before the run lower to run this low here. All right, then how come the market didn't come to these candles? If you put your buy limit right here at the top of this candle, you wouldn't have got triggered in. I used this candle and I highlighted it on my signal. The body of it. Here's the body right here. And I'm going to put a line there just to show you how accurate that is. And that's the difference between me and 90% of Twitter and ICT students. I want everyone to be able to, you know, everyone deserves to be successful. It's just, I've worked very hard for 6 years and I've been doing this every day. So it's just like, experience has a lot to do with it. You know, experience is everything. But anyways, this was the candle I chose, not these candles. Look over in time, boom, perfect. And that, again, is why I didn't put my buy limit. A lot of people probably put their buy limit at this candle right here, the order block on the 4-hour chart. But guess what? They would have missed the trade. It didn't go down to the order block. I used the breaker. And if you didn't see this breaker and you see this order block, you can put your first buy limit. I do this a lot too, because it always doesn't come down to the order block, especially when this candle right here has no wick lower. I'll put my first buy limit here at the very low of this, of the fair value gap. And then my second one would be at the order block, because they don't always do both. But anyways, So you have all these confluences on euro. And then sure enough, look what we did. We filled in this gap. And they actually went higher. And no, they didn't get up here, but we filled in that gap. So this was a classic market maker buy model setup. You have your original consolidation, you have your whatever distribution. We go up, go lower, smart money reversal, market structure break, low risk buy probably would have been right here, fair value gap right here, low risk buy. I missed this the week prior. I was so bummed because I missed this. This was your low risk buy right here. And if you go to a 1 hour setup, you'll see how clear that was too. And I was so bummed that I missed it, y'all. It's right here, low risk buy inside of your smart money reversal. You have this imbalance. You could have put your fib from the daily low up into this swing high. New York open kill zone, take out low, fill in imbalance, go higher, take out relative equal highs. So this was your low risk buy setup for the overall smart money reversal on the buy model. But I missed that and I still found a way to get in to make pips the next week. So I was very happy. Real quick, I actually have some shit I got to do and I'm running out of time, but let's just highlight some more price action real quick. I did not take this trade right here. I did not take it. I talked about it, but not in depth. And I did not make this a signal. I wanted to, but some shit was going on and I didn't. I didn't do it. I don't know if I was sleeping. I wasn't confident. I'm not sure. But which I'm a retard for not taking this because this was the same week as the DXY and Euro analysis I just showed you, October 13th through the 19th or 17th or whatever. Remember the DXY analysis that I just talked about? That was bearish. Go back in the video and rewatch that, how I was explaining why I was bearish right here on dollar. And then I just outlined the euro buy setup. Well, I wish I would have called this setup too, because it went perfect with the bearish DXY. So we're going to give you guys a breaker example. One moment. And then I'm going to have to end this video because I have to go do something. How the hell did that happen? Okay. I did show some friends this setup before it happened, but none of us took it. And I don't know. I hate trading multiple pairs at the same time because I get distracted and one pair's in drawdown and the other pair's like I get overwhelmed. I don't know. It's like a personal problem I still deal with to this day. Like I cannot buy euro and pound at the same time. It's just hard. Like one will be in drawdown and then one will be on profit and it just fucks my emotions up, man. So anyways, but here is an ICT breaker pattern setup. Another one. This bearish candle. Then we have all the back-to-back green, strong, bullish candles, the bullish move. Where'd it go? It ran above these relative equal highs. Oh, I didn't need to do that. Hold on. Trend line, where are you at? Boop. We turtle swooped above these. Then we break down lower. If you missed this high, I hate calling tops and bottoms because, you know, you get them wrong a lot. But it's okay not to call this high right here. Why? Because look, we break down lower. Here's the bearish candle that started that. That's the reason why we broke higher. We did a false manipulation liquidity run above there, break down lower. We have this green candle, the order block. We have the strong down move. Look at that body of that candle right there, which also blends with this bearish breaker. And then you guys already know about the highlight right here. This candle's low. this candle's high. The price action in between that, which would be all right in here. This candle, the one I just talked about, the long body, we never filled back in that, so that's inefficient. That inefficiency right there blends with the ICT breaker pattern and the bearish order block. So you blend all that together. That's how I look at charts, guys. You just gotta be patient. You'll see it. This is a 4-hour chart. This blended with the bearish DXY analysis I just gave out at the beginning of this video. So I don't know why the hell I didn't take this sell. We go up, stab in there to the breaker, and then balance. Didn't go all the way to the order block. Here's another example. Like I just told you guys on Euro, we didn't even go to the order block. We just filled in the imbalance, but we hit the breaker. What's the close on that? What's the close? I just want to see 0.92654. What's the high on this? 0.92641. Okay. I don't know why I said it like that. I thought it was the exact same number. Anyways, so we hit it and then reject lower. Oh, this is why I didn't take it. This is why I didn't take the trade. Because when this happened right here, I got all freaked out and I was like, damn, why are they coming back up? But here's some manipulation. We made a higher high. There might be some divergence on dollar when this happened. I don't know. Yeah. I remember this right. I remember this now. I remember when they hit this and they moved lower. I said, "Fuck! Wish I would have called that." You know, I seen it and I drew it all up on my chart before it happened, and then I was like, "Why did I fucking trade that?" And then they came back up, and I was like, "Okay, that's why." And I was glad I didn't take the sell, but then they came up to the order block, still inside of the breaker, and that was the actual high. And they move lower to a previous daily low. Beautiful trade. And knowing me, and I'll be honest with you guys, listen to this. This is the transparency I have, okay? I ain't no little fucking pussy bitch like some of these Twitter kids. But here's something honest I would do. And here we go. If I would have caught this sell and I seen this rejection lower, guess what? I would have put my stop loss above the daily high here. I can already go ahead and tell you that. I would have done that. I would have went to bed, woke up, and got stopped out. And if I didn't wake up in time, I would have missed the real move. That's just the truth. That's how my mind operates, you know, because here's the framework I just told you all about. And then we got the rejection lower, and I would have been happy. That's 40 pips. I'm in profit, 40 pips. For a day trade, and I would have paid myself something like we're taught to do, and then put the rest risk free. But my stop probably would have been, I know it would have been above this high, and I would have got stopped out, and probably been too scared to sell it again, unless, yeah, who knows? But anyways, this was a really beautiful setup as well. All right, guys, I got to go. Sorry. Hope you guys all enjoyed this video. Make sure to please give me some cool comments, some likes, subscribe, share it. I'm going to post this on Twitter. If you guys all share this, it'd mean a lot to me. I want to get more views than my #1 video, which was my first video. It got 2,000 views now. I mean, it's no big deal, but show some love, guys. Love you guys. Have a great week. Bye.